Hi, welcome to the Market Alert for Wednesday, the 2nd of August 2023. So yesterday, banks, bonds and bullion battered as dollar rips to start August. It's now been 40 days since the S&P had a down 1% day. We know this ends in tears. US stocks were mostly lower amid weak data, while futures are pressured on Fitch's US rating downgrade. And the BBC reporting this morning, not my favourite news channel at all. So down from AAA to AA plus, and you have to laugh. You have to laugh at this. The US government credit rating has been downgraded following concerns over the state of the country's finance and its debt burden. Well, that can be said for the Eurozone, the UK, and all the rest of the countries around the world. Seems slightly odd, but I thought, well, it's just an irony, isn't it, really? Because it won't be long before they're printing another trillion just to move the debt ceiling to the upside. You can't make this crap up, frankly. But that's the reason for the weakness, and that weakness has continued overnight. But before we move on to look at that, ADP numbers out today at 115. Forecast is 191 from 497. Big drop in those numbers. Anyway, let's kick off, have a look at the Dow, see what it did during yesterday. So, to the Dow, actually it's not faring too badly considering the headlines, more the S&P I think, and down on the overnight there, bit of weakness yesterday, certainly overbought. The implied volatility is down in those multi-year lows, so we are due a correction in this market. 30-minute chart, you can see them trying to pump the market up at 230 and then trying to hold the market. Then Fitch comes out overnight and says, no, sorry, your credit card's got a problem, pal. And the market down, but it's come back so far, but it needs to get back above that DP in order to move higher. Probably be shrugged off at some point, but if we look at the detail overnight, you can see there that the market gapped significantly, just about filled the gap from there to there. Not a lot in it, but certainly a big gap down there for the Dow on the overnight. Let's just get a sort of an idea. So it opened and then shot down. So it gapped down 100 points and then moved back after a shakeout to the downside of another 70 points, 80 points. But so far the market below the DP, but sideways there. Probably have a bit of a sell-off on the open, if I've got to be honest. I mean the open of the German DAX futures. The futures in the Dow also following to the downside. Speaking of the DAX, in the German DAX, you can see yesterday strong day to the downside, trading down to 78% retracement. Watch the 89 with that 50 EMA. It may be one of these situations where they've got the bad news, get everybody to go short and then bring the market back. So just watch these particular levels here. And also this one here, just in case we break the 89, because it's got additional support there and there. And that's going to be at 16,000, which is a very important level, as you will know if you follow the market alert. So 16,000 is probably where the market's likely to go down and find a bit of support there. 30-minute for yesterday, well, we started on the weak side. We tried to get back in the smaller time frames above the low, but failed. And then we had a sideways bit through lunchtime at the S3, which you'd expect. 90+% of the time the market will sit at this level. But the weakness in the US continued and the market was brought lower. We've got a situation where the market is being gapped lower as well. And as I record, the market's looking like it wants to test the S1 and also the low, and also that very important level, the 16,000, which ties in with the S1 there as well. So watch that level. And in the 5-minute chart, you can see this in a bit more detail there, as the market looks like it's already gunning for that 16,000 level. Needs to get back above the low there. In the S&P, down yesterday, down on the overnight as well. You can see the weakness there. Tried to bring it back yesterday afternoon in the cash market, failed, and overnight you've got the gap, and we've not filled the gap yet on the S&P either. We need to get back above the close, but I suspect that the low will be attacked before that happens, or any sign of that. In the FTSE 100, down also, and you can see there the market moving as I'm recording, and it needs to hold this level, which is going to be 7621. If it fails to hold that, then we're going to be moving to the downside from these sort of areas, 38, 50, 62, 78. But watch the 50% retracement. You've got a couple of averages there as well. 30-minute chart, very choppy, down, back up, and then down, and then overnight gapping lower as well with the Fitch numbers. It's starting to have some effect as I've been recording for the last half an hour or so on other videos as well, and you can see that this is starting to impact a bit here. So that low there that we have of 7621, if that's broken, then start watching these numbers in the FTSE. US dollar, well, it said it was racing up, but I don't see much racing going on here. Up again on the overnight, but like I say, it's not screaming to the upside. The moves to the downside are far worse than any significant move to the upside. Just have to wait and see what the ADP numbers come out at lunchtime and the impact it has upon the US dollar. So I was expecting the metals to be battered more. You can see a bit of demand back for the metals yesterday, but overnight some more weakness, and no doubt they're going to take advantage of this. You can see yesterday they monkey hammered the price of silver down. It's come up on Asia, but watch this area for today. It's going to be hammered down to that level, I suspect, at 130 or 115 with the news. In the gold market, also battered yesterday as well. And in the 30-minute chart, you can see that there. So again, even despite the rally overnight, watch for the low there being taken out at 130. So despite being battered yesterday, gold investment demand for physical gold continues in second quarter. Extremely strong demand for physical gold in Turkey and more broadly in the Middle East helped to drive gold coin and bar demand higher. And don't forget, central banks are buying gold at the fastest pace that they've ever done since 2010. So it helps to actually batter the price to the downside. Like I say, you'll see the low taken out today. No problem at all. They'll use the ADP numbers to do that. So they can keep the pressure on the downside for silver and gold while the credit rating is being destroyed by Fitch. Then let it be, because one day the lid will have to come off and you'll see these low prices will be hard to believe that they ever traded at these levels. But that's in the future, and when, who knows, because they keep kicking the can down the road. They always find a way to fix it, don't they? Well, temporarily, of course. Okay, that's it for this one. Let's see if the market continues its weakness with the Fitch downgrade and the ADP numbers at lunchtime. Okay, that's it from me. As ever, thanks for watching. See you.